Good morning, everyone. Welcome to our Tuesday morning trading session. Hold on a second here. I'm going to get you my monitor screen share going on. All right. Oh, dropping stuff here all over the place. Alrighty. So we've got the market just opening up and a little bit of a tumble lower right here out of the gate. This was pre-market, of course, but a decent 4-arrow consolidation. Now, here's something to note. There's really only 3 arrows here, but there are 5 signals. The 4-arrow consolidation I actually printed off of this yellow bar. Sometimes it's worth your while just to follow the signals. 1, 2, 3, 4. If the 4-arrow consolidation has this characteristic bear flag, or in the case of an uptrend, a bull flag. This one is almost textbook. You would certainly expect the market to break down from there and head lower. So that would have been worth a try if you were watching the market before this morning's open. We're going to give them a minute here to settle in. Try not to get too anxious. Market made a quick retreat here to the hard edge. You can see here on the Eagle, as well as on the Raptor, right here into the hard edge. And this is giving us a slightly different look, isn't it? This is almost looking like a gigantic bull flag. Maybe we'll see the market bounce and move higher. "25th of October already, my goodness, only 2 months till Christmas." Better start making those Christmas shopping lists. I know everybody's saying, "Eric, you're a funny guy." Hard edge also coincided here nicely with the primary support line on the Falcon. Yesterday was such a strong day. Well, the day itself was not that strong. What was strong was yesterday's overnight. You know, it was plodding along. Where did we open? We opened right about here. Yeah, I guess right about here. Yep, sorry, right about here. First signal came here, and certainly a nice progression, but we still have this huge opening gap down here that never did fill. I wonder if we're going to try to get into that today. All right, a first micro macro cross. Shoot, let's see. What is this going to cost me to be wrong? If I get in there, get out there, yikes. All right, well, they're hunting for a direction here. Let's dip our toes in the water. All right, now this is the first trade. It's only a single. I'm going to delete my profit objective and maybe, just maybe, be able to run this one out. What time is it? 6:35. We're only 5 minutes into the session. Just making a couple notes here in my trading journal. If you're not keeping a trading journal, you really should. And what you want to do is you want to record your reasons for taking the trade. Well, almost. They're trying. There's obviously going to be some, what the traders refer to as psychological support around 4,900. This tends to happen around even numbers. It tends to happen a little bit less on the tens, but you can see there was a little hesitation here around the 10, certainly on the 20. I find the double zeros and the 50s to be the most influential. Come on, give me another push. Might be turning into a late filter entry signal here. Note the trend line already out of sync. So far, the trend line itself holding the red color. So long as the trend line doesn't go out of sync, this has the potential of turning into a stronger trade. I am going to look at adjusting my stops here shortly. If we can get a bar to finish lower again. When we went to last weekend, we were looking after our grandson. We went down for a night to look after him. And he's got one of those Wii video games. I'm still sore. We were doing that dueling, that sword fighting. Oh my goodness. My arms and shoulders are still aching. Come on. Come on. Just give me that one bar. So here we are, we're into the hard edge. Here on the eagle, could be looking at a little bit of a bounce, perhaps. Maybe a cloud crossover on the raptor, and a working a possible macro pullback here on the hawk. All right, come on. Okay, so we've since moved into yellow bars. No four arrow consolidation on this particular raptor, this particular hawk pullback. Even though it does have that same consolidation shape, I would not trade it as a bear flag just because it looks like a bear flag. The whole idea behind the four arrow consolidation is that you see the sellers trying to recover the trend. There's a sell attempt, a sell attempt, a sell attempt. And then it's like that fourth time, it's like, all right, are we going to do this or not? And then they finally push, or if they don't, well, then they fail and they just keep going sideways and possibly working into a first micro macro cross higher, or perhaps just drifting in a sideways range. Here was a four arrow consolidation, not quite as neat and tidy as the other, but it's the same thing. The buyers attempt to rally, attempt to rally, attempt to rally, and then the fourth time it's like, all right, let's go. And then they go fourth signal and they push higher. So right now we've seen the buyers come up, but the sellers haven't really attempted to short until here. And now they're attempting again. We may get another third and fourth signal still, which would make it a four arrow consolidation. All right, I'm going to enable my stops. That's all I'm going to give them. They're just taking too long trying to head lower. very sideways here at the moment. Yeah, well, don't bother reversing now. Scoundrels. My goodness, don't tell me it's going to be another day like yesterday where they're just stuck. Oh, thanks, Stephen. Stephen says consumer confidence out at the top of the hour. That might spark things a little bit, and that could account for the quietness. Daniel, yes, I took the early stop out. I placed my stop above this swing high right here, and they looked high enough to stop me out, so I'm currently flat. I took like $150 loss on that. No, 135. A little better than I thought. It may still head lower. I was not happy with the, leaving the not happy with the market not showing me any downside momentum after this fill. It may still unwind, it may still head lower, but at the moment, it's not shaping up as I anticipated, so I brought my stop in and took the early stop out. Mr. Buckaloo is asking, what do you think about that red bar buy signal on the Eagle? Yes, that has the potential to be a very good signal. This is a red bar buy, which is a high probability signal. We do have an opportunity for a second push on this one. So what you would do is you could enter just above where this market is currently printing. Try to go 2 swings back if you can. Here's swing 1, there's swing 2. Yes, I agree with Denton's comment here also. Denton makes the remark, these comments could be posturing themselves for election results as well. You know what, Denton, I think you're absolutely right. I think that's part of the reason things have been so dead is, well, it's an election year, and the markets are always get kind of squirrely around election time. Yeah, Denton says they're nervous. I agree. I would I would agree with that assessment. I think they're very nervous. All right, so let's take a look here at this potential red bar buy signal on the eagle. We'll see whether or not we get a fill on that. This gap down here, I'm sorry, I can't help myself. That gap still calls to me. As I'm sure it does every trader who's looking at the chart. Okay, we'll put that on the shelf. 1, 2, 3. This is going to be now our fourth arrow on the consolidation, the 4-arrow consolidation. You know what? I'm going to treat this as a little bit of a sideways range, though. We're getting a few too many yellow bar clusters for my liking. It certainly is saleable. And you would think, well, we'll see what happens at the top of the hour, whether or not we get a little bit more of a breakout. All right, here they come again. Reluctantly. So this would be near the top end of our trading range where we're looking to enter right now. So the trading range that I suspect, because of these yellow bars, is a shorter term trading range, looking a little bit like this. The market has shown a little reluctance to head lower, so they may well try to check out the top end. Maybe. Soybeans looking a little bit more bullish, just giving us a rather late trend change signal, but it is supported by the primary resistance line. So the trend line changed color from red to green. Here's that push that changes the trend line color. Here's the sellers trying to recover the trend. And here come the buyers one more time, looking to push that market higher. So you can do a second push on this one as well. It's only a tick away, where you could enter above the high of that current bar. Well, ideally you would want to cover below here. That's going to be out of reach. So we need a little bit of a compromise if we're going to take the trade. Perhaps below, can I go below the swing? Nope, can't. Oh, I can. It's a little bit pricey to start, but there's a potential rally brewing in soybeans. Paul's asking, would you consider the Falcon trend change? Well, I'm thinking about it, Paul. It's, you know, if nothing else, the market should give us a better test of the extreme. It is a valid signal. There's no question about that. The market seems a little bit sideways to me, so I would probably dial down the risk amount or just go to manual mode and only throw a single on here. Again, I would take the second push on the entry. You do need to be prepared to walk away from the $200 though. This is not the type of trade, if the trend is attempting to change, the short-term trend I'm referring to, this reversing against this downtrend. If the trend is attempting to change, you don't want to crowd this trade because it's going to need a little wiggle room. Don't tell me. Don't tell me I was too quick with that. All right, so we can scrub this buy order on the Eagle. We were looking to do that, the red bar buy. Starting to shape up a little bit like a rule of three. We've got the one signal against the hard edge. We're producing a warning dot. We may produce another signal against the hard edge. We do need to see a proper test of the extreme, though, before we can go and call this a rule of three. See, so the eagle still, pardon me, the hawk still continuing sideways, producing these clusters of yellow bars, everything all out of sync. The falcon now getting more out of sync, the filter all over the place, the trend line starting to waffle. I suppose if you were inclined, this would be a good spot to do an OCO type order. You could buy a breakout higher. You could sell a breakout lower. That is an option. don't want to throw too many orders on this thing, though. All right, so it's about 5 minutes past the top of the hour. It seems like the consumer confidence report not really adding to the market's directionality. Stinkers. There you go. Tony says the report was right in line with what everybody was anticipating. All right, so here they come working this red bar buy signal again. We didn't engage the last time because we were doing the second push on the signal. We were entering above the high. You could wait for this next signal to print. This is going to fall in line with the OCO type trade that we've done. Oh, I was going to set up my OCO differently this time. I forgot. All right. So we've got a breakout higher now. Let me get a stop in play. And here we go. 706. We're going to try to buy the Falcon now. Peter asked, Eric, do you record the false starts in your journal? If you're referring to the trades that never filled, no. I only record the ones that fill. If you're referring to the losers, yeah, I record those. Alright, well, no follow-through, or very little follow-through today. I'm going to hold my stop here just for a moment. I don't want it to roll just yet. Tony's asking if I watched the OCO video on the NinjaTrader about how they use the OCOs. No, Tony, I haven't watched it yet. I meant to do that, to use the OCO that way and bracket above for a buy order, bracket below for a sell order. I'm thinking a move back here to the median line would be a nice profit target. Oh, sorry, I don't need the... Yeah, I get your point. Stephen says regarding OCO orders, if I don't know where the market's going, I'm not interested. And there's a lot to be said for that. Let me go back here to the hawk. So we've identified that the market's moving sideways, right? So when the market is congested, the idea of an OCO order is to buy the breakout or sell the breakout. If the market gets through the top end, we're going to buy. If it gets through the bottom end, we're going to sell. So that's what the OCO function does. The problem with buying or selling breakouts is that most breakouts fail. I had a good trading friend who used to say, never trust a breakout. And here's why, because it goes high enough to engage your order and then just starts going sideways again, or worse, moves against you. So the OCO order tries to take advantage of that early breakout, looking for some early momentum, which of course may or may not be there. Because for everybody who's buying that breakout, somebody is trying to sell it thinking, oh, the market's in a trading range. I'm going to sell the top end of the range and I'm going to buy the bottom end of the range. All right, so here's our second signal now on the eagle. Not quite a rule of three just yet. So we've got two counter trend signals. This doesn't strike me as a very good test of the extreme, but we'll see. Price is back down now to this whole 4,900 area that's been managing to support the market so far this morning. Tony's asking about the double OCO that they do on NinjaTrader. I think what they do, Tony, is by doing an OCO this way, so let's say we're going to sell down here, they preset their profit target. So this OCO is to short, this OCO would be to buy. And what they do is you can preset your profit objective. So if the market fills to the long side, you've got your profit target in play. You can cancel the sell order, and the corresponding profit-taking order will also cancel. I think that's what they're doing with that. Now, of course, I haven't watched the video yet, but that's what would make the most sense to me. Yes, yeah, Tony says exactly. You scalp it before you take a loss. Yeah, definitely. And you can do that manually as well, right? You can watch your P&L, and when it hits a number you like, you can simply hit your close button. Oh, we got a sideways mess going on here today. Crude oil starting to flip-flop a lot. Here's crude oil. Again, getting some yellow bars. This was a decent 4-arrow consolidation or a green bar sell, however you'd like to see it. Whenever you see a market that hasn't made a test of the extreme yet, you should anticipate that it will retest that extreme before possibly failing and heading the other way. That's sort of what we're on the lookout here with the eagle here on the NASDAQ. Haven't really seen a good retest of the overnight high. Keep producing these hard edge bounces and red bar buy signals. Then they come back and breach the hard edge and produce a sell signal. ay. Just no follow through. Yeah, Russell, I know. Russell's saying, how about a possible rule of three? Well, that's what I've kind of been watching here. But I, there's two things you need for a counter trend signal. First, you need a trend. We've got that. No question, the market's in an uptrend. Secondly, you need a test of the extreme. Now, time will tell whether this little push here is going to be the test or the retest of the high, but it doesn't look like much of a retest to me. Even if you take the market from yesterday's open, which is right about here, that's still a pretty decent uptrend. The whole point of the test of the extreme is, are the buyers prepared to walk away because of the selling pressure? Well, I haven't really seen the buyers, try to reclaim the market yet. Now, you're perfectly correct. If we get that third signal, we will have a rule of three signal. Is that going to be enough of a retest? Well, we won't know. If the market if this second leg had come up here, if it come up like this, and now it's coming down, I would be telling everybody, get ready for a rule of three. We're going to see the market print against the trend, probably down here somewhere, and go ahead and short it. Short below here, and we should get some good follow through. But that's not what we're seeing. We're seeing a very shallow retest, which might be enough if you're going to take this pending rule of three signal. You probably should go in light. Just throw a single on it. I wouldn't do two contracts. Throw a single on it. If it works, great. If it doesn't, well, you've reduced your exposure. Let's see if I can find you a better looking rule of three. Well, here we go. This one's not bad. Not nearly as strong a trend as the one we're currently looking at, but certainly a better retest of the high. See, the buyers pushed here, then the market broke the low, buyers pushed hard, they got all the way back, or almost all the way back, to this previous swing high. Market came down, actually made a higher swing low, suggesting that the buyers are going to really try to rally the market this time. And then the market pushes up and the sellers knock them down early again, and there's your rule of three. So here we can see the buyers trying to recover the market. Here, not so much. It's a 50-50 trade, Russell, I would say. The elements are there for the market to move lower, but it is very, very sideways also. I know, it's not quite the explanation you guys were hoping for. Well, there's certainly looks like some momentum down here now. we've had 3-4 solid bars in a row. Let's see that little channel that I drew before. Are we breaking the bottom end of the channel? Just barely. So the buyers are going to try to be buying here. Sellers are going to try to be selling up here. It is a first micro-macro cross, so everything is starting to look a little bit more bearish, isn't it? Don't think the market made it all the way to the break-even trigger. So you'd still be taking a little bit of heat on this trade. Yes, I know Russell says the Falcon as well. We've got a trend change / late filter entry signal. It's the whole sideways nature of the market this morning that's giving me fits. Come on. Alright, let's put that away for now. It's a very tight trading range today. Tony says, tight trading range, no kidding, crude oils. ATR, he says, is only 79, which is our day ranger little tool, and that is very tight for crude oil. Most of that looks like it came through the overnight. Since the North American Open down here, not a whole lot going on. Not a happy place right now. Come on. I shouldn't have pointed out the gap. Tony says if it wasn't for that darn gap, my perspective would be different. Yeah, I know. That's what I mean. It just keeps calling to me. There's that huge gap down there. It's huge. That's a big gap. Well, days like that, I always think a trader I used to know, he would always say, the big money's on the surprise side. So whatever side you think the market's going to move, it's probably going to go the other way. I'll admit, though, everything is starting to look a little bit more bearish. always painful. And there's nothing else going on. Can't point out crude oil to you or soybeans. Soybeans did reject the buy signal we were looking at. Where was that? So we were looking at a possible trend change signal here right up at the median line. We were looking to take the second push on the signal, which is good because the market turned around and decided to go the other way. Gave us a trend change signal lower. This is on the Falcon, of course, and pretty much recovered to the overnight lows. So it's starting to look like soybeans may be in sideways mode also. Pretty weak follow through on all these moves, however, which is suggestive of a sideways market. So we had a nice uptick here, just how quickly the bars progressed higher, and then nothing. And a decent move lower, and so far, nothing. I admit, though, this is odd to see the markets this quiet at this time of the year. But the only thing I can conclude is that traders are pretty happy with the NASDAQ around 4,900. He's getting there, Tony. Tony asked if our grandson's old enough to go golfing yet. He just turned 9 in September, so that's something we'll get him more involved in next year. He's gone out a few times, but of course he's more interested in driving the cart. Oh, yeah. Here they go. Oh, seller's trying to push hard. See the Geiger counter here? It was full on to the short side. And here they go. Doggone it. little too late to pull the magic mouse out and force the market higher. Yeah. Stinkers. Well, it's that kind of day today. Just very sideways. Crude oil taking a little bit of a move lower now. Here's crude oil on the hawk. So out of that earlier 4-arrow consolidation slash green bar sell, the market did come back, produce a first micro-macro cross. I believe it. Denton says the mid-cap was the best behaved market today. I believe it. Mid-cap's a little bit more civilized than some of the others. Honestly, I don't know if we're going to get another trade on here this morning. I do agree that the bias does seem to be down now, and I regret my earlier trade here, bringing my stops in as quickly as I did. But at the time, I had my reasons for doing so. I stuck with my trading plan. I wasn't going to allow the market to retreat too far against me. Unfortunately, I should have given it a couple more ticks. And it looks like we could have hit at least the break-even trigger, maybe even the profit target. There they go. Now they're starting to unwind a little bit. If we get a direction going today, it will be a little bit easier to pick up a subsequent signal. Spoke too soon. Get a couple bars in our favor, and then they put the brakes on again. So that first micro macro cross signal did finally reach its profit target after a little bit of wandering. The eagle, I believe, is still working that rule of three profit target. So in hindsight, it does look as though that is all the tests of the extreme that this market's prepared to give. Almost to the profit objective there. The Raptor, I'm not sure the Raptor actually gave us a signal this morning. Oh, I suppose this cloud crossover right here. It's a little bit sloppy, but the clouds, got themselves in a bit of a twist here and then crossed over. Market very briefly entered the cloud and came right back out. Well, just on hold until we get the next signal. Now that the market seems to be committed to the short side, we can look for a possible macro pullback or a double pullback signal here in the Raptor. Soybeans still on the slide, as is crude oil, although a little bit of a moderate decline. So there was that soybean signal after the failed attempt to rally. The market tried to rally, did not, came back with the sell signal, and just a very solid move lower on soybeans this morning. it seems like they've put in a short-term support, and now we're going to see a little bit of a retrace, maybe get back into this hard edge on the trading band, which coincidentally would put us very close to the 4900 area again. Just waiting for a high probability setup. I know we're producing a couple sell signals here, a couple warning dots. But I would prefer to go with one of our high probability signals, which means that we should see a little bit of a retrace first. Well, things are getting a little bit quiet again. I think we're going to button up the room, but before we do, Russell points out, he writes, pretty amazing to the power of the 4-arrow consolidation signal, referring to the breakout 15 minutes ago. The 4-arrow consolidation signal is such a strong pattern on the hawk that it's the only signal I will take off of a yellow bar. In fact, a lot of times you will get a yellow bar on a 4-signal or a 4-arrow consolidation pattern. And yes, it is tremendously powerful. So certainly something to keep a lookout for when the market starts congesting, starts drifting, going sideways. That is definitely worth keeping a lookout for. In fact, we may be building a 4-arrow consolidation here. At the very least, I believe we'll see a macro pullback, and that should give us another opportunity to short. I'm not sure the market's going to go gangbusters here to the downside. It's been such a quiet day. But I do believe we are entitled to one more leg lower, one more push lower. All right, gang. I'll see you tomorrow morning. We're going to be meeting in the open house room. So if you don't have the link to that, you can sign up for that at the free trade room link at the Indicator Warehouse homepage. And we'll talk to you then. Hopefully the market will be a little bit more fluid than it was today. See you tomorrow. Bye for now.